Hi, everybody. This is Dennis Wilborn, founder of Active Trend Trading. Thank you for taking the time to watch this free video that we do every week. It is a video where we cover the markets. We also have oftentimes have some trades that we might be setting up that you might want to take. But I want to ask you, before you leave the page, as you watch the video, just give us a real quick thumbs up and share the content with somebody else. Leave us a comment. We'd really appreciate that. So aloha, God bless, and mahalo. Hey, good day, everybody. This is Dennis Wilborn with the Active Trend Traders. Welcome to the Art and Science of Active Trend Trading Update. We're updating you on May 27th, which is Memorial Day 2019. Let's get into today's session. We've got a lot to cover. Anyway, hey, I want to remind everybody that all materials we do present are for trading purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. When I founded Active Trend Trading back, founded back in 2007. My objective was very simple. I wanted to provide a clear and simple system that could be learned easily by people who are still working for a living, so that they could multiply their assets. And we're working on that continuously across the years. We have been profitable ever since we went live in 2012, with an average return of about 31% per year. I want to remind everybody that all trading errors come from a lack of patience and compulsion to do something, even when nothing really needs to be done. In this session, what are we trying to achieve? Well, one, I want to take a real quick look at the tracking indexes that we watch on a weekly basis. I want to cover a couple of potential bonus trade setups, a couple that I really are very interesting. They're not ready to buy right now, but dadgummit, they are looking hot even in this cold market. Other market driving events, trade wars, global weakness, kind of interesting. And then our tech tip, big pictures off the weekly chart. So I'm going to cover that really quickly. So just a real quick, where are we from a seasonality standpoint? One thing that's been really interesting about this is the seasonality going back to 2000, from 20 years average through 2016. One of the things that's very interesting about this particular seasonality chart that we're seeing from the past years is normally January through February, you get kind of just the whole doldrums with NASDAQ, not a lot of move. And then you go into a nice typical rally that starts around the 15th of April after taxes and goes up higher. However, this year we've gotten one of these kind of, bump up. Hey, the NASDAQ up over 12% for the year so far. And now we're getting kind of this who knows what. Are we going to plunge? Are we going to plunge a little bit, then go higher? We don't know at this point. However, seasonality tells us that here's where we are. We're between closing in on the end of May. Normally, June timeframe, we're going to get a bid in the NASDAQ running higher. Crude oil. Crude has followed its seasonality fairly well. With the potential global slowdown, crude is looking a little bit weak. Here's where crude is currently sitting seasonally. You expect a little bit of a pullback into the midsection of June, and then a rally from June into the end of September, first part of October. We'll see if this comes to fruition. With the, I don't know how much the trade wars with China are impacting the crude pricing, but we'll have to wait and see what's going on with that. And one thing that I offer on a regular basis is, for those of you who are interested in, is basically on a weekly basis, I highlight all Lucky 13 watch list that is provided by IBD, and then I do my own proprietary sorting of that so that I can come out and say, okay, here are the entities, the stocks that are showing up on the greatest number of lists. Here's the ranking, and you'll see that, hey, most of those you may be aware of already. One that just made it to the forefront is Glob. So you may want to take a look at also Monster Energy drinks. If you want to get a copy of this on a weekly basis, I post it with the Art and Science of Active Trend Trading video on the website. If you want to be able to take advantage of it, just find this, go to this website and log in. So for this week, okay, looking for a potential bounce. Timing is right for a potential bounce in the indexes. Now, we'll take a look at the chart on that. What does that mean exactly? A bounce, and then two of the stocks I like, Palo Alto Networks, going into earnings beyond. Interesting story, and Roku. Let's run over to the charts real quick and take a look at them. I'm looking at that, basically the weekly charts. As you can see on a weekly chart, what is being defined? Well, we've got momentum starting to roll over on a weekly chart, crossing to the downside. However, on a daily chart, we are finding some support on the spiders at about 280, and that also coincides with the 100-day moving average. Again, it would not be surprising to see basically test back down to 280 level, and then a rebound on Wednesday, Thursday, or maybe even Friday. Where to, though? I would, the moving average has caught the last rally attempt very nicely. So look for a rally back up into. I'm looking for a rally back up into the moving averages, and then what? Well, if this is basically a series of lower highs, lower lows, I'm looking for a pull back down and a run back down here. Where are my, I've got a couple of targets that are here, and I'll use the NASDAQ to show you how I develop those targets. Speaking of which, let's go over to QQQQ, which is the ETF for the NASDAQ, and how I develop those is basically just a two-step pattern is what they call it, and we can see that here on the daily chart. I'll blow this up a little bit, keep it real easy to see. And so what I've done is basically I have pulled in a Fibonacci that tracks from this high to this low. That's one move down. Then it tracks back up to this swing high, and then it projects down from that a 786 and also a 100% extension. Now, what that means, that 100% extension, is it's symmetric with this prior run here, and those two levels tend to be the target zones, if you will, for a two-step type pattern. If we get down to the 100% retracements, or even the 78.6, that's where we might want to, where we could potentially. Well, it's a stronger candidate level for a bounce higher. Is that going to happen first part of this week? We'll see. We could also just immediately run up from here. Let me get rid of the drawings there. We could also just do a real quick run up from here. Where to? Again, back up to the moving average or this downtrend line, then a retracement back down here. Because this zigzag movement, these internal zigzags in here, still, they don't, as long as this trend line is not broken, and I would say as long as we stay below the moving averages, that these downside targets are applicable. That's 175.55 and 172.69. NASDAQ, let's take a look at IWM, which is for the Russell. IWM, there we go, for the Russell. As you can see, it's looking a little bit weaker. It is already at its previous support. It hit the 786, came close to the 786 extension. That missed it by 20 cents on Thursday. Has bounced up a little bit. It has a little bit steeper climb, or a little bit more of a climb, to get back up here to the moving averages, but that's what I'm currently looking for. I mean, we've got a series of lower lows, lower highs, and so what do you do in a situation like that? We want to lean towards the downside until we get a proven hammered out bottom, and then we'll be looking at things to the upside. Let's take a look at those other two stocks that we've talked about. Palo Alto Networks. Palo Alto Networks and some of the other networking stocks got really whacked out last week a little bit. You see here on the weekly chart. TSI pointing to the downside. The grace on this is we have earnings coming up on 5/29 after market. That's after on Wednesday. What am I anticipating? I will do on my typical earnings trade, which is basically wait till the day of earnings, and about a half hour to an hour before earnings, I will put in a kind of an iron condor type of spread that takes advantage of huge implied volatility and a very wide expected move, and I will put in some orders within that. Typically get about a 1-to-1 risk-reward ratio, and normally that comes in pretty. They've been coming in very nicely for us so far this earnings seasons. It's a real easy, simple trade that we share with all of our premium members. Lastly, the other two stocks I want to cover real quick. Roku. Roku just came out of earnings and just blasted to the upside. Here's the day after earnings. As you can see, ripped up and broke out above this of a cup with handle type pattern. It has broken out. Never did come back and actually retest at the level. The only pullback that this has had on this stock so far is that brief 2 days, and then it was off to the races again. That has not come back and touched the 8-day moving average yet, but I still like this stock longer term, but it's just not where I can buy it yet. If we project up to the upside, I'll do a real quick projection on you just to show you where we could expect this to potentially go, I think. Here we go. Let's just do a quick Fibonacci here on the weekly chart on this last move down. There we go. Pull it down to that level. And as you can see, we've already it ran up really fast up to the 1618 extension. It's got its eye on the 2618 extension, which is the next. That's the third target to the upside. So we may see prices move another $10 up to that level before it gets any type of a significant pullback. Been a really good stock to watch. Like I said, I still like it, but it's just not ready to drop yet. This is a new IPO, Beyond. It is a synthetic meat company, if you will, but apparently it has been very well received. I think it has basically been tested in Horton Sandwich Shop or Horton restaurants with good results. The thing that I call your attention to on Beyond is that it makes it that there's a lot going on behind this stock. Is just as past, over the last couple of weeks, they've come out with weekly options on this, and the weekly options is fairly unusual to come out with weekly options on a stock that is only 4 weeks old. 4 weeks old, and that's all she is. So I will keep, again, it is, got a really nice launch out of here from 46, has already ran up to almost 100. It actually made a 100% move. We're getting a little bit of a pullback. Just check and see if this pullback from here to here is, see if it's equivalent to this pullback from here to here, because it may be ready to launch higher. But again, it has, it's of interest from both buying the stock and also doing some kind of an option trade on it with the weekly options. Like right now, the at the money $80 option will pay you about 4% if you were just to do a straight covered call. So I want to call that to your attention. And switch over to the intraday charts to basically time your entry. And premium members, you know what I'm talking about. We'll be basically covering this a lot over the next week or so as it looks like it's getting ready for a really good setup. So that's the entities that I want to cover for the week. Just real quick, finishing off. Here's where the markets finished off on Friday. As you can see, active trend trading, we can, as I've said earlier, we just continue to plug along week after week after week after week, adding to our bottom line. And we're starting to overtake some of the indexes. Right now, we're on track, looking like we should be able to reach somewhere between 15 to 20% by the end of June, which puts us on track for our 40% for the year. How are we doing 2019? Here's where our different strategies are doing. I've really been working hard on focusing on compounding with strategy 2, but also equivalent focus on the other strategies as well. There's what we've done since 2012. And then the power of compounding. That's one thing I'm continuing to hone in on. One of the things I think is missing from many trading systems and also education to traders is there is not a focus on strategic compounding. I mean, we talk about it, those of us who are baby boomers remember when our parents used to do compounding at the savings and loan because they were getting 6% on their CDs. And so they would lock up their money for 2 or 3 years, get their 6%, and then it would compound on a lot of times quarterly to monthly or basis. But it would be about 6% per year, and that's the way they grew their money. However, when interest rates went into the toilet and basically are at 0.25%, compounding kind of fell out of favor, or the idea of compounding was basically, you know, dropped out of vernacular, and also I think the training of individuals. And so they're not aware of the power of compounding. Some of the new tools that are available with traders, specifically with weekly options and this type of stuff, has, I believe, empowered traders to once again be able to consider and take advantage of strategic compounding. And here's one of the things we're just trying to do with active trend trading. 1, strategy 2, we took $10,000 at the beginning of the year, and if we compounded it at only 5% per week. Is that reasonable on a small account like that? I believe so. And as it grows, you know, you go through the first quarter. Let me go back one. You go through the first quarter. You know, you've taken it up. By the end of the first quarter, your 10,000 has grown to 18,000. Then you go to the second quarter. Your 10,000 is now grown up to 35,000. Wow. Then it starts to really make a difference. And I'm thinking, you know, hey, you know, many of us have basically either spent and or lost for many different reasons. You know, 2007, 2008, when the market dumped, maybe we lost our nest egg and we're going, gosh, I'd really like to rebuild my nest egg. And understanding weekly compounding, strategic compounding, even at an amount of 5%, is the way we can basically get us back up to where we have a new nest egg that then we can, you know, will it help you out in your retirement ages? You betcha it will. Because imagine $10,000, if it was perfectly compounded at 5% per week for 52 weeks, would be equal to $126,000. $126,000. And then if you continue then you could almost just, hey, I'm going to continue to do 5% per week and just use that for income. Or let's say you're looking at trying to do college funds for your grandkids or your children. Wow, another great way to do this. And we're working on another availability where we're just looking at getting 10% per month. And if you've got 15 or 16 years in order to invest for your child, you could just start with a lump sum of $2,000 and compound it at 10% per month for 15 years. That would take care of college tuition when it's time for them to go to school. So how are we actually doing? That's always a good question to ask. We actually didn't get started in actually the focused compounding until about 4 weeks into the year. So the first 4 weeks we had nothing, but we've really come on here in the second quarter. We finished the first quarter with 12,500, so that's about 27% return, and then we've continued to compound. Do we successfully do it every week? No. As you can see here, we got hit a couple of times. However, we keep plugging, we keep plugging, we keep plugging. And so at the end of last week, we're up 77.91%. And our target for this week is $889.53. That's our 5% growth target. So, hey, I just like to end the session really quick with video discount for a winning system, which is the active trend trading system. The offer ends the 31st of May. And what it is take advantage of all 3 active trend trading strategies. You'll save 40% off the regular $124.99. In other words, you can get it for $74.99 per month. If you want to save a little bit more, take the quarterly membership. It is once a quarter, $199 per quarter. That is really good deal. So you can save about $175. Lastly, here's where you sign up. It is password protected because I'm not offering this just to anybody. SAVE, and that is SAVE is case sensitive. So until next time, as always, trade wisely and profitably. Mahalo. God bless everybody. And this is from both myself and my lovely bride, Michelle. And on this special day, which is Memorial Day, I just want to take a moment and thank all these folks here who died for our freedom in uniform. So thank you very much. God bless everybody. Hey everybody, this is Dennis. I want to thank you very much for listening and watching our video today about how to trade less and profit more, eliminating variables that steal valuable time away from you. Just a real quick highlight. Please join us today as an active trend trader. If you don't want to go and research all this yourself, you can join active trend trading. Here's a discount amount, 40% discount on the monthly rate. You even save any more if you do it quarterly. Please just sign up with us, give us a try for a month, and see if you like us, and see if you don't benefit from being an active trend trader. Thank you.